Good afternoon, ladies and gentlemen. Once again, I'd like to thank you all for honoring us with your presence and your time to be with us at the launch of our 2024 Nigerian Banking Sector Report. The history of the Afrinvest Banking Sector Report started quite auspiciously in 2005. This was coming at the end of the first recapitalization of the banking industry. At the time, Governor Soludo, who is also still a governor, but now governor of Anambra State, was then the governor of the Central Bank of Nigeria, and had determined that all Nigerian banks must raise their capital from 2 billion naira to 25 billion. So at the end of that exercise, where Afrinvest was both an advisor as well as fundraiser for many of the banks, we wrote the very first banking report, and that was launched at the Dorchester Hotel in London in 2005. Since then, we have established the traditional writing a banking sector report, which not only eclipses what is happening, not only showcases what's happening in the banking industry, but also highlights the dynamics of the Nigerian economy. So it's my privilege to present. I'm going to do a very short presentation on this year's report before we then launch the actual document itself. This is supposed to show us growth trends. And this was the growth, if you look at it, the world economy, how they've grown from pre-pandemic era. 2022 is the blue, dark blue. 2023 is the light blue. 2024, the red. And 2025 forecast for the growth. And you can see that global growth has been somewhat flat, since the pre-pandemic days. Of course, the south of sub-Saharan Africa is the block towards the extreme right on your screen. And you can see it's quite flat, but trending positively. But if you look at the developed economies, advanced economies, they too have had more resilience springing out of the big weakness they experienced following the pandemic. If you look at Nigeria in more detail, specifically, in terms of GDP, we are seeing real growth at 2.9% versus 2.3% that was for the same period in 2023. We see faster expansion, obviously. Foreign exchange has depreciated quite significantly. We are all living with that, around 1,500. Inflation, high, 34% from 2023, about 23%. And capital importation, although it's improving, is still not where it used to be. But at least some of the CBN's unorthodox policies have been moved out, and we're getting to a more stable picture. But if you look at the sectoral performance, you can see how the different sectors of the economy have been doing. Finance is the best performing sector, showing strong growth momentum. 2023 above 25%, 2024 year to date, quite impressive performance. Mining and quarrying has come from a negative performance and is now showing some positive trends. Oil and gas, which is the big supporter of foreign exchange, has shown very, very poor, weak growth. It's still recovering, but you can see that we have not been investing enough in the area of our economy that generates our most foreign exchange. And then the other sectors are important: real estate, manufacturing, trade, ICT, and agriculture. When you go to the banking sector, like I said, you can think about it. Let's kind of step back to 2004, 2005 era. Then, pre-recapitalization, there were 89 banks, average capital of about 2 billion naira, and then there were 757 community banks. But note, the total shareholders' funds of the banks at the time was $2.4 billion, then 311 billion naira. We then went through the recapitalization process, by which time 6 banks had raised capital to meet the requirement of 25 billion. 19 banks had managed to find a way to combine themselves to become, meet the license requirements. And then of the 757 community banks, it all shrunk to about 603 microfinance banks that we had at the time. But post-recapitalization, we ended up with 25 banks, national banks, or rather, no, they didn't have the word national at the time. 25 banks that had met the then new minimum capital of 25 billion naira, and a total shareholders' funds, all combined, of about $7.3 billion at the time. That's 932 billion naira. That's a number you should bear in mind today. Fast forward from 2005 to 2010, we then had a new CBN. Sanusi Lamido Sanusi became the CBN governor in 2009. He also did a rejig of the banking sector. He then decided that we shouldn't have one size fits all. And that's when he then introduced tiering of commercial banks. And in the commercial banking, he said there will be international banks that must have a minimum capital of 50 billion naira. The national banks can remain at 25 billion. But he also introduced regional banks, where the regional banks can take at least 2 geopolitical regions of Nigeria, including Lagos and Abuja, and they can have a capital of 10 billion naira. At that level as well, they introduced merchant banks with a minimum capital of 15 billion, and non-interest banks, national license at 10 billion, and regional license at 15 billion. This new directive removed what we then knew as universal banking as well, because at the time, some of the hangovers of 2005 recapitalization was that these new banks had raised capital to 25 billion, were also allowed to do all sorts of non-banking activities. You will recall that every bank then had an asset management company as well. They also had investment banking, brokerage firm, and there were all sorts of, I would say, not very transparent things they did with those subsidiaries, which created quite a lot of non-performing loans. But the central bank in 2010 said, no, we can't have universal banking. If you want to be a commercial bank, you can remain only as a pure play bank. Otherwise, you can become a holding company and then have a holdco own the bank as well as own the other non-banking assets. So, move forward to the present time where we are today. We have banks with international license. That's those that have 50 billion naira and above. We have 7 of them: Access, First Bank, FCMB, GTE Co., which is a holding company. Access is a holding company, actually. First Bank is a holding company. Fidelity, Zenith, and UBA. Now, the previous capital for this group was 50 billion. It's now going up to 500 billion naira. Then you have the banks that have national license. There are 13 of them today: Citibank, Stanbic IBTC, EcoBank, Keystone Bank, Union Bank, Standard Chartered, Sterling, Globus, Polaris, Premium Trust, Unity, and Optimus. They have current capital of 25. They are required now under the new directive to go to 200 billion naira. Then you then have the regional banks. There are 4 today in the category: Signature Bank, Paralex Bank, Providus Bank, and SunTrust. Previous capital 10 billion. They are now required to go to 50 billion naira. We also have the merchant banks. There are 6 banks in that category: FBN Merchant Bank, Coronation Merchant Bank, FSDH Merchant Bank, Greenwich Merchant Bank, Nova Merchant Bank, and last but not the least, Rand Merchant Bank. Previous capital requirement, 15 billion. They are now required to go to 50 billion. And then, last but not the least, among the non-interest banks, we've got 4 in that category: Jaiz Bank, Lotus Bank, Taj Bank, and more recently, the Alternative Bank. And these ones, their previous capital requirement was 10 billion naira, and now they are required to go to 20 billion naira. So you can see that the level of increase among each banking group varies depending on where you are. Some have a real high order to go to. If you're going from 50 billion to 500, or if you're going from 25 to 200, while some have a smaller jump to go, like going from 10 to 20, as the case of the non-interest banks. But where is the gap? We've done an analysis of the gap, the total gap for capital requirements for international bank today, they have together a capital of about 1.3 trillion naira currently. They will need to raise an additional 2.2 trillion naira, all the 7 international banks, to bring them to about 3.5 trillion. But that will put them, that's an additional $1.6 billion at the current exchange rate. And we've used the average of around 1,400, which is more or less the official rate. If you look at the national banks, their gap is 1.6 trillion naira in additional capital to get them to 2.2 trillion. The regional as a group, their gap is 545 billion naira. The merchant banks have a much lower gap of just only 200 billion naira, whereas the non-interest banks, today they are reasonably well capitalized and their gap is only 14 billion naira. Most of the non-interest banks, indeed, by the end of this year, their audited accounts will show they've met their capitalization, so there's nothing to worry there. But if you put the whole industry together, you see that you're looking at something like 4.1 trillion naira funding gap for the entire industry. And that's a huge ask in today's money. But that's an additional $3 billion that the entire industry is looking for. But then remember what I said when you think about the 2005 era. At the end of that capitalization, the banking industry had a capital of over $7 billion. Right now, today, when we finish doing all this additional capital raise, using the current exchange rate, we'll have a capital of about $4.5 billion. So we're still very, very far away from where we ought to be. And that just underscores the challenge of the sort of anemic growth that the economy of Nigeria has suffered over the last 2 decades, from 2004 to where we are now, 2024. These numbers are not showing, so I'm not going to dwell on them. We wanted to show you a slide of what the individual gap is per bank among the international banks, national banks, merchant banks, and non-interest banks. But suffice it to say that in terms of the capital raising, you still find that, as the CBN governor said through his representative, banks are now looking for a lot of capital. They're going to go through private placement for some of them that are privately owned, or even the public ones. If they need to admit a big strategic investor, the best way to do that is through a private placement by a public company. The rights issues are ongoing. Access Bank has launched a rights issue. Initial public offering, offer for subscription. An IPO will be for those companies that are private at the moment. And there are only 11 listed banks out of the 29 or so banks in total amongst the categories I've described, excluding, of course, the microfinance banks. Mergers and acquisitions will happen. We have not seen anybody trying to do any mergers and acquisitions, but the evidence of the M&A that was done in the past doesn't paint a very rosy picture for some of those M&A transactions. The last but not the least, the license downgrade or upgrade. Well, that's a very challenging one. It's like you living in a mansion in Maitama with it's a 5-bedroom, 5-bedroom, 3-living-room mansion. But there's a 3-bedroom BQ at the back. And one day they say, "Oga, move out from the mansion and go to the boys' quarters." That would be very difficult to swallow. You go and explain to your wife what happened in that process. But today we have quite a number of offers in the market. You can see FCMB is out, GTCO is out as well, Access Corporation, Zenith, Fidelity, and more banks will come out. And everyone will tell you that their shares are the best to buy. If you need more information on which one to buy, you talk to Afrinvest. We can help you analyze it. But we're not here to disparage any bank stock. We're just here to tell you that there's a lot already in the market, and there's more yet to come. And some people may say, "Oh, let me take a first mover advantage and go into the market." Some people may be more patient and say, "No, let me wait for all of them to pass through and I'll pick." Sometimes evidence has shown that both sides can be right. But all I want to say for now on this issue will be shine your eyes. Make sure you have a qualified financial advisor who knows what he's doing. And Afrinvest has been around for 29 years, so we can certainly claim that we know what we're doing in that space. Thank you. But the capital raise poses new challenges. As our panelists have talked about, when you want to think about growing the Nigerian economy to $1 trillion, it's not just the banks that will need to grow. Every other aspect of the economy needs to grow alongside with it. The CBN governor has said this is really paid up capital and the share premium. So the retained earnings that banks have had for many years will not be counted. So you need to raise capital and put it in as paid up share capital. That's a very tall order. But that also brings in all sorts of advantages and strengthens the balance sheet, strengthens their credit rating, and makes them stronger to go, you know. But there's also the concern that if you think of where the banking sector is and the current size of loans they have created, and suddenly within a space of 1.5 years, they double up. But that means that all their return numbers will go down. The return on equity will go down, return on assets will go down. And they can't easily go and start increasing the risk assets they are giving by lending more money to customers if there are no safeguards. Otherwise, they'll end up losing that money. So there are issues to think about. While at the same time, while they're raising money, there are all sorts of other challenges that some of our panelists have talked about in terms of, you know, even the current cash reserve ratios, liquidity ratios are quite high. And at the same time, you have a government that's running its budget on a deficit. That means they are printing more money to put cash into the system. And that same cash, you're trying to quarantine it at the central bank. So there are a lot of mixed signals. In the same economy where many of us feel challenged by the cost of living crisis. And I would say that, yes, in this room, we're among the privileged, but all of us are feeling the pinch of inflation, the pinch of exchange rate devaluation, and yet it's the same little income that we have that we need to put aside and invest in banking stocks. So lots of complicated issues that we need to deal with. But getting from, assuming it all works out, one way I'd like to end with is to think about, if you want to go somewhere, think about somebody who's already there. And we came up with this group, the Mint countries: Mexico, Indonesia, Nigeria, and Turkey. And these other 3 countries are economies that are already at $1 trillion and above. And we just thought, let's think about where they are, what really makes up and drives the economy. Mexico, for instance, $1.8 trillion, right? GDP per capita, $13,000, let's say $14,000. Human capital index, 0.61. Human capital index is a World Bank's data that says, based on the quality of healthcare and education and security and all these niceties in a country, this is what an 18-year-old would expect to have, from birth to 18. Mexico is at 0.61. Let's leave the bank assets for the moment. Indonesia, $1.3 trillion economy. GDP per capita, $4,700. HCI index, 0.54. We skip over to Turkey, $1.1 trillion economy. GDP per capita, $13,000. HCI, 0.65. Now, look at Nigeria. We're at $362 billion. GDP per capita, only $1,600. But HCI is 0.36. We are the only one amongst the 3 that is below 0.5. And at 0.36, it tells you that we have a lot to do in the quality of human capital, education, healthcare, security, that we need to infuse in our people to get them to be able to, get there. If you do all the investments you want in the banking sector without having skilled workforce to work in the banks, it just won't get there. It's the same thing with industrialization. Mr. Rashid Sarumi was talking about we need to have excess agricultural output so we can do agriculture-led industrialization. But we need human beings to work in those industries. And it all comes back to the HCI. But if you then look at the banking assets, you can see across all the other 3 countries, you're seeing multiples more in terms of bank assets, deposits, and loans. Nigeria, with all the effort, we have only $33 billion in loans, bank loans, cumulatively. Whereas Mexico's over $100 billion disbursed in loans, Indonesia, nearly $300 billion, and Turkey, $171 billion. So clearly, there's a lot of work. This whole idea of the banking sector is a systemic thing. The banking sector is one perspective, but it needs to bring along. And if you look at the way the economies of those other 3 countries are organized, you go to Mexico, in manufacturing, the huge component, 25% of the economy. You go to Indonesia, agriculture, 25% of the economy, followed by manufacturing and ICT. So you can see in Mexico, manufacturing, wholesale trade, retail trade, real estate takes over 60% of the economy. Those shows you that those sectors are the sectors that employ a lot of people. But to employ people, you need to have them well-trained and well-skilled. Same thing is happening in Indonesia. When you come to Nigeria, you see agriculture, but our agriculture is subsistent agriculture. It's not gotten to that industrial agriculture yet. We have manufacturing and trading and ICT, but we haven't still gotten that momentum in terms of employment. And today we can see all sorts of challenges from the effects of decades of mismanagement and misalignment of policies. You can see Turkey itself, much stronger economy and much more diversified. So these are some of the issues that we're talking about, that when you now think of how Nigeria gets to that $1 trillion economy, yes, it's important to recapitalize the banking sector, but it's very critical that we shouldn't forget the other components of the economy that must come along. And I'll end my presentation by talking about just 6. And I start with human capital. Human capital is critical. We need to continue to focus on that in education, in healthcare, incentivizing investments. Indeed, one would say that Nigeria's biggest hidden asset is our human capital. Today, even with the limited but increasing flow of foreign direct investment, what I also have seen statistics to show that the remittances from Nigerians in diaspora is kicking up. It's around about $2.5 billion a month. That's important. Now, if you can train Nigerians to actually work in ICT, you can have Nigerians sitting in this country earning dollars that are coming in. It doesn't have to be remitted. It's the companies that are working for that are bringing those dollars to support and grow the economy. But we need safety, security, we need education, we need healthcare together. Of course, power. Ike Chioke has talked eloquently about what we need to do in the power sector. I don't need to talk about that. Industrialization is critical. Rashid Sarumi is one of the leaders in that space. He's gone as far as putting his money where his mouth is and recently launched an ethanol plant that is being supported by 5,000-hectare cassava farm in Edo State. So right from the farm, they're taking cassava into the ethanol plant, processing, and they're having ethanol to sell to many companies who need ethanol in Nigeria. But that's just one person. We need to have multiples of this in large scale. Oil and gas, our main breadwinner, the main earner of foreign exchange, you can see from all the data that it actually has been a shrinking industry in numbers terms because we've not been investing. And we've had years of policy instability that the biggest oil majors have all been moving to different countries. You've all heard the same announcement, ExxonMobil, Shell, all finding deep new fields to do in Angola where they are happy with the fiscal regime to invest in them. Agriculture we need to prioritize as well as our digital ecosystem. So on that note, ladies and gentlemen, I want to thank you all for listening and welcome you once again to the launch of our 2024 Nigerian Banking Sector Report.